Okay, so it looks like you and I are here, and our guest, Mr. Rowe. Okay, he should be coming in here soon. I see him getting set up. But in the meantime, I'm going to start the welcoming because it is 12:30, and we like to start on time.
Perfect.
Of course, right? At the very least, what we can do is start on time. Well, good afternoon, everyone, and welcome once again to the KoreSummit Webinar Series 2021. My name is Oscar Joffrey, and we are so delighted once again to have you here today. We're going to have another fun discussion in this whole realm of equity crowdfunding, RegA, RegD, RegCF. And this particular discussion we're going to have this afternoon was inspired by one of the webinars that we did because of some of the questions that were coming from the audience afterwards. Thank you very much. I've asked some of our panelists to come back in again and to help us and to have this really in-depth discussion about structuring your RegA offering, which sometimes seems very simple, but as Mr. Rowe will tell you, it's not always the case. And there he is, and he's going to put his cowboy hat on and put the gunslingers on. I'm here. All right. So let's get with the introductions first. Marty.
Yeah. Hi. Marty Tate. I'm a securities lawyer. Do focus most of my practice on private capital raising. Been involved in crowdfunding since the very beginning, and have represented issuers, platforms, service providers, everybody in this crowdfunding space. Have focused my work primarily on RegCF, RegD, and RegA offerings.
Well, perfect. Sometimes you're a little shy about you've been there from the beginning, and people don't know when the beginning is. So I'll just bring everybody back. It's 11 years now, or 12. So yeah. People think it just happened last week, but it didn't. And another one of our fellow esteemed colleagues that's been there right from the beginning, Mr. Rowe, Mr. Gunsling and Rowe.
Well, Marty, I love my friend Oscar, but he always mispronounces my name. It's Rowdy. It's like Rowdy, man. It's Row. But anyway, Oscar,
Row.
Come on.
Dang. At first, I had your first name wrong. I think I got that. Jim.
Okay. Yep, Jim. And then I'm gonna just change the title there anyway. Oscar, good to see you. Jim Rao with Intoro, investment bank, broker dealer. We have a valuation company, RIA, etc. So background, a lot of structured finance, and we'll focus a lot on not so much the legal side of the things, but let Marty talk most of that. And I think it was our discussion you and I had, Oscar, that we talked about how to structure a transaction. And a lot of people don't spend a lot of time, and they think a lot of, they go through a lot of, antics, and sometimes they just don't think about actually structuring the transaction. So hopefully we'll have a pretty good dialogue here, and look forward to the questions from the panel and also from any guest online.
No, you know what? It's true, and that's what I indicated in the beginning. This is a pure example of what we can learn, and we acted pretty quickly. Actually, there's been a couple of things you brought up that we hopefully will redo the research, but is that when you start having discussions like this, you start realizing you need to get in another area more in depth. In fact, Marty and I, yesterday, we were just chuckling before you came in. It just seems like yesterday, because yesterday him and I spoke about, obviously with RegCF, another regulation, there's changes, broker dealers are getting involved, and there's a whole new way how that can happen. And it was really gratifying to know that he's embracing it, and we're gonna have a panel on that, because I think it's good for BDs, FINRA broker dealers, to understand they can use it, but it's so there's some little intricacy. But today is about, as Jim alluded to, is how to structure your RegA. And this is really interesting because we have a lawyer and a broker dealer, and obviously from a company perspective, you need to follow and you need to be guided by these two professionals who are going to be the instrumental into that. And so, and the reason we're bringing that up is because everybody thinks RegA is just simple, sloppy Joe. Here it is, easygoing, but it's not. Jim brought it up in one of the other discussions, and we could have had another hour added on just as he was talking about that. So, but let's talk in general. I think it's important just to remind everyone why this is becoming critical. Is because on the 15th of March, you will now be able to raise up to $75 million. So this just changes the way you approach the market. This will change everything that you do within your company, and it's imperative that you plan for it. So let's start with you, Jim, because obviously from a broker-dealer point of view, you have a firm view that you're now seeing enough RegAs. So let's talk about, first of all, what do you mean by structuring? Because that could mean, I just want to make sure, let's cover that phase first, and then we'll move on to the next part.
Well, yeah, it's a great question. What does structuring mean? And that to me means everything from what type of equity, what types of equity are you putting into, what kind of optionality are you putting into your agreements? What types of, is there things, and I'm talking overall, let's just talk overall. It could be RegA, it could be anything, but just the structuring of something. Do you have warrants? Do you have options? Do you have, what does the transaction look like from A to Z? And are you building in the types of things that you need to? Are you anticipating growth issues? Are you anticipating expansion issues beyond your borders? Are you anticipating all the kinds of things that you really need to? So are you structuring it not just for today? Are you doing your deal just for today, and you're handicapping yourself in the future? So it's really about thinking through the process as much as anything else. And a lot of people will just, take the flavor of the day and just, what have you. Now, I'm a firm believer also in you can get too cute. And a lot of people try to will design things. And I'll go back to an example. And a lot of it can be in the digital or crypto side of the equation. People will spend too much time over designing things like token mechanics, and they'll spend way too much time thinking about that versus the core transaction of their deal, be it real estate or consumer products or what have you, and get back to the actual heart of the deal instead of some of the actual token mechanics. But if you look at what really structuring is, it could be, is it, the type of equity, is it, and is it preferred, is it, common, is it, what are the features of each one of those classes, what type, it's really what are you going out to sell. Now, I'm always concerned from a sales perspective that you have something that can be easily explained, because if you make it too complicated, you can't sell it. So you need to have, obviously, the proper structure, the proper overview, the proper structure. But if it gets too difficult, it's you won't be able to sell something. And if you're looking at it in a Reg A or a Reg CF, you need to be even more pedantic in your structure. You can't make it too complicated. And so you can get complicated in a Reg D, but in a Reg A and a Reg CF, you need to be a little bit more plain vanilla.
Okay, that was a great. So it could be a number of variables, and that's the way you're looking at it from a broker-dealer point of view. Marty, what anything outside of that you're coming at it from a legal, when you hear the word structuring and you're guiding a client through a Reg A offer? And you're on mute. We love that voice, harmonious.
Sorry, there we go. Structuring is really important, and we spend a lot of time doing that. We have clients that come to us and say, we want to do a Reg A. A lot of the Reg As that I've worked on are not as much for operating companies. Operating companies, you have to look at and say, okay, what are you going to, the simplest question is, okay, what are we offering? Are you offering common? Are you offering preferred? Are you doing, is it debt? Is it warrants, like Jim said. So, and a lot of times they haven't even thought about that. And so you have to say, okay, how does that, if you offer common, how is that going to work? Or some people want to offer a class of shares that doesn't have voting rights. And so there's things to think through there in how you classify those. And a lot of times that will require that we amend their organizational documents to provide, the separate class or whatever is needed. Where I see structuring becoming really important is we have companies coming to us that are structured to be, not investment companies as defined under the rules, but companies that are set up to go out and make investments in different types of assets, whether it's real estate, oil and gas, crypto. There's a lot of different these type, and I don't want to use the word funds because SEC doesn't like the word fund when you're doing a RegA, but these types of funds and structuring those becomes, that's key. Right? Or, for example, we're doing, I'm working on a REIT right now, and that's requiring all sorts of creative structuring. I'm not trying to get overcomplicated, but just by its nature, it becomes complicated. So structuring, this topic is great because we spend a lot of time talking about structuring.
No, agreed. And I have to admit, I'm at fault probably myself by telling people it's very simple. It's either a debt or an equity. But as Jim alluded to, even on the equity side, you could have a voting, non-voting dividend with a revenue share, with a mix with a warrant, and all these other elements to it that don't overcomplicate it. But I think you touched on something there, Marty, that we don't hear enough, and I'm just going to touch on it. That even after the structure becomes important because you may need to amend your articles or your bylaws or your company in order to allow you to do that, right? I did hear that correctly?
Yeah, that's correct. Because, if you're going out with a different class of equity, a different class of share or limited liability company interest or unit that doesn't exist, particularly if there's, if it has a preference, or if it has, a non-preference like non-voting or something, unless that already exists, a lot of times we have to create that, which, is not a huge deal, but it's just something to think through from the beginning. I think that these aren't the questions that people have top of mind when they're starting the process.
So I'm going to come back. We'll come back to the real estate, because I think real estate really is I'm not going to say the most complicated, but it's the one that requires the most work because it's got so many different variables involved with it. So we're going to come back to that one later on. But Jim, I want to touch up on a few points today. I've been calling it a journey. I don't know what word you called it, but I thought it was really great question. And I agree with you. I don't think a lot of entrepreneurs think this one through. I've certainly been testing it lately after our conversation, but which is, okay, so you're doing a RegA, great. What's next? What do you mean? Well, what's next? So tell me some of the complications that could happen, because forget about the size of shareholder base. I mean, I don't think that's really the issue, but the way you structure it here could hinder your next step going forward, right? As you indicated, your expansion, but what is it that you want to do tomorrow? So how impactful could that be for a company?
Well, I think you have there actually becomes two things that can be hindrance. It's not only the structure, but it could also be valuation issues, right? I mean, those can be one and the same, or they can be very different too. I mean, the valuation, and you and I've talked about that before. You can undervalued to the extremes can be detrimental. So both sides of that equation can be very harmful to your case. But if you can get into a situation that you have, you could have disproportionate voting. You can have non-dilution shares that may keep the next round or something there that may prevent shareholders coming. There could be a number of things that could end up impacting the next round, positively or negatively. You could have super rights. You could have there's so many things that could impact you on your next round that you need to think through that could adversely affect. I mean, there's all kinds of things, and Marty's more of an expert in this than I am. I mean, just even where your domicile. I'm a big fan of keeping it simple in Delaware or Wyoming, locations, maybe Nevada, those types of things. And if you're doing a REIT, Maryland, Marty, correct me if I'm wrong, Maryland's pretty much kind of the REIT location where most companies kind of get formed. And then voting can be a big issue if you have too many classes. Whether or not it's a C Corp or an LLC, that can be a big positive or a negative, depending on what your next step can be. That's not a deal killer usually, because you can convert an LLC to a C Corp. It can be a little bit of a pain in the backside, but you can certainly do that. I mean, if you're going to eventually go public, if you think you're going to go public, C Corp is probably a better way to go. Marty can give you a little bit more, and we talked about it a little bit. REITs are a totally different animal. If you're doing real estate, in a REIT structure versus another type of an entity, that's a big one. Another structure that can also be different is whether or not are you selling equity, or are you selling cash flow, right? So a lot of deals, and maybe we can talk about that. This is maybe just beyond the RegA kind of concept, but are you selling equity? Are you actually selling the rights of ownership in a company, or are you actually selling a cash flow stream? So that's a different discussion as well. So you need to always understand where that's going, because a lot of people get in and say, oh, I'm just going to give you a certain percentage of the cash flow. Well, that can be totally different. That's a totally different animal and totally different structuring. I mean, that's a totally different investment vehicle at that point than an equity investment.
But it would still have the same impact on the future, because you're giving away, not giving away, but it's part of the funding. It has a cash difference. I mean, it's going to impact your financials differently, but I mean, these are factors that you have to think through. It's one of the reasons why we put together in our own shop, and we make available to people an onboarding kit. So it kind of helps you think through, not only when you're doing your current transaction, but to try to help you for your, for the growth of your organization and how you're going to grow yourself. But how does we have to face the reality that we're going to see a variance of audiences, both in all the regulations, whether RegA, RegD, and obviously we're talking about RegA, but I see it in RegA where they don't know yet. So what's the optimal? I'm not sure if there is, because one of the things that I lightly heard from you, Jim, you start talking about the exit. The exit, how much of an impact can it have on the structure if the individual doesn't have it properly planned out? It could end up costing twice as much to reverse it or to undo it. Or Marty, I mean, it'd be interesting to hear. I mean, are companies coming, or are you advising them, asking them that question? So what's the end goal? You're raising 75 million, great. What's the exit? Are you asking that, or is that just off the table at the moment?
It's not as much of a question. The exit, for the most part, people are trying to raise capital. Now, as you know, you can include essentially a third of the offering can be this, what we call resale shares. Basically, you're including or qualifying or including in what you're selling shares of the current shareholder. So sometimes they have that in mind. They say, okay, we want to allocate some portion of this 50 million, or now soon to be up to 75 million. We want to include in the shares that we're selling some of the shares that are held by our early investors or our founders or something, and create some sort of liquidity there. It's a little bit different than going public, because you are limited on the amount that you can share, beyond just your standard sort of lockups, or the overall, there's an overall limit. But I don't, and I think one of the positives of potential benefits of RegA is that you're receiving unrestricted shares. So there is that potential of listing on the OTC, or even potentially on NASDAQ, or one of these alternative trading systems, and creating liquidity. So I think that you have that in mind when you're doing a RegA plus. But I don't know, when you say exit, I'm not sure. I think everybody's that invests is looking. There's got to be some sort of exit, right?
Oh no,
So,
agreed. I'm trying to. I mean, when Jim was going through it, we're talking about the types of securities, whether when you're going to offer, a share, what type. That could have an impact as you dilute yourself, as you start looking at it. When you need to make a big decision on acquisition or to go public, you may need certain voting component, or you may need to amend your bylaws or your articles to do that. And then, of course, you need to take another impact, which is the future growth. Somewhere in there has to be a button saying, okay, I would like eventually, potentially, this is the most preferred exit, that somebody acquires me or I go public. You're right. The actual share, the security, sorry, it's actually look at for the investor, but for the company itself, it needs to look at what its future goals are. Because I do agree with one thing I have seen, I've experienced it personally, because I didn't get proper guidance at the beginning. The cost associated with redoing a structure later on, it's not just twice as much. It can be daunting how much more you need to do, because it not only do you need to unwind that, you need to take unwinding and everything else associated with it. So it's important. So so these are the three areas that you guys touched on. And then Jim, you brought in the issue of domicile. So meaning where the company was created, meaning Nevada, Delaware, Wyoming, some of the states, that could also be not a hindrance, but it needs to be factored into the structuring of your offering. Because I think what I'm hearing from everyone is that here's a checklist of items you need to consider, and you need to have that in the forefront over here. And then you need to make sure that you're articulating that to your broker dealer and your lawyer. And I'm going to come back to this because I'm really curious about this. The broker dealer typically doesn't come in during the structuring component, right? At least I've not seen it yet. I've seen it. I've seen the broker dealer brought in after the fact.
Less so on an A. It's on a D. It's much more customary. On an A, it has, if you can call it traditional. Traditionally, it's been more of an afterthought, because it's been more of a broker dealer of record kind of concept versus a co-placement type of kind of activity. So you don't see it as much. You historically, I'd rather change the word historically than traditionally. Historically, in the RegA market, you haven't seen that, because it's been that type of a structure in the market, that it's been a broker dealer record. People come in, they do their like your system, you have a button, you kind of do it yourself, and it's been more of that kind of a business, and it's been more of a relationship with counsel. I would think it would be, you should always have a discussion with the financial side to make sure you're out there selling to what investors may want to see. So I think you should always do that, but it historically hasn't been the case.
And how does that fit in with all the other? Okay, so that's true. Historically, we haven't seen the broker dealer been brought in. I don't know in your case, Marty, but I haven't. I mean, I'm bringing in a broker dealer to a client after they've engaged with a lawyer. They're already getting at that point where they're getting ready to file. So that means they've got their structuring, or at least, sorry, that the structuring has been done. There's still another third party involved here, which is different than in Reg Ds. You see it, but they're a fairly dominant voice in this discussion, and that is the investor acquisition firms, which are the ones really and they're the ones out there promoting the offering through their messaging and stuff like that. Does that account for any of it? That's there's a balance here, that there's the broker dealer who's used to doing the traditional, where that's one view versus one that's trying to get the view of thousands of users. I'm just curious how the structuring, because in Reg A, we need to change it. Historically, it's been this route. Now we need to change it. So how do we go about that? Because the company's going to spend considerable amount of money in this offering, so it's imperative. Jim?
I'll let Marty. I've been taking all of Marty's time, so let's turn it over to our.
Well, he zapped me in the leg saying that I already speaking too much. That was you then. Sorry.
No, I know you're great, and I'd love to hear what Jim has to say on this. I was just going to say, you brought up a good point, Oscar, that a lot of times they're not thinking about broker dealers initially. In fact, a lot of my clients will start off and they'll say, we're just, because we don't need a broker dealer, so we're not going to do that. And we talk about, well, it's then the issuer, you as the issuer have to register in certain states, and it's at that point where they start to, late in the game, they're like, oh shoot, maybe we should get a broker dealer on board. So, I think that it'll be interesting to see as it evolves, if it takes on more of a public offering type approach, where you have the broker dealer playing more of a role of like an underwriter and being involved from that, from the very beginning. I haven't seen that yet, but I think if you're doing offerings up to 75 million, I don't know why you wouldn't. So
if I can jump in, Marty, I think it has turned since literally March 1. And let me give you an example. 2 examples. Already I've had 2 law firms since March 1, Monday, flip deals over and basically said, we need somebody to come in, and because of the $75 million nature, and another one being they want us to use this tool now as serial transactions. So starting a system where it's used differently than it was before. Okay, so it is going to start looking more as a different tool than it was before. So it's going to take on a different, you're going to see a different set of players starting to use now that the tool is different. You're going to see different set of players, and you're going to see a little bit more, not 100% the kind of a underwriting style, but you are going to see more people approach it that way than and have less of a adversarial type of thought process to a BD function.
I completely agree.
One thing we're seeing on that too, Jim, just to add on, is we're being approached by public companies now, 34 Act reporting companies, that are saying, hey, we want to do this too. And this was even before the 75 million, but I think you'll see more companies entering that space, because it is an option that's can be easier than maybe doing an S1 or an S3 offering. So it'll be interesting to see how that expands.
Well, and if they can carve it out and do, there may be so there may be a reason. I hate it when everything's all connected to your phone, everything connected to one. But there may be areas too where you're going to see larger organization use these for just SPV purposes, right? That they're going to have a particular project in mind, and boom, that's how they're going to use it to get funded, versus kind of versus another way to do it. So you're going to have a totally different way, and I think you're also going to see, and it's going to be. I think you're going to see some innovative things in the real estate world, and then depends on the industry sector too. I think you're going to see some really neat things, be it consumer products versus some other industries that are going to use the tool differently. So I think it's a very, now that it's going to get a little bigger, you have more flexibility, and you're going to see a whole different set of entrants.
I'm glad you guys got it to that point, and because that was one part of the structure of the deal that nobody brought up. We talked about the lawyer you were talking, but we actually historically the BD has been left out, and I'm a big advocate, as you know, I am pushing. In fact, we will not take on a client. We will not even let them use our technology unless they have a broker dealer. We are that strong behind it, because this is what I call the ripple effect of, what happens when certain things are not there. One, it's as Jim and Marty are alluding to, is the structure of the deal. But it's not just that. It's whether you transact it properly. It could be, it could have an effect for all of us, because they're using certain payment gateways that could affect us by getting cut off. So I'm a big advocate of this. I see the role of the broker dealer not just to be the BD of record, but I'm now starting to change. I need to talk to our team to make sure that the onboarding begins a bit differently. We have been historically, sending the client directly to the lawyer to get that signed off, and then to the BD. But we're going to change that, because I think it's important, because this could save a lot of time and money for both parties, making sure that not only are you both good working with each other, but you got some good guidance and understanding what you're about to offer, asking questions that you probably wouldn't even think of, that, oh shoot, you know what, I didn't even, now I got to unwind it, or I'm too far down the line, right?
Well, look at, I'm not going to speak for Marty, but I can tell you, I want the good bouncing, to bounce off lawyers, all the dialogue of having good structuring and good ideas for a client. You want that interaction for the benefit of the client, right? And it's not that much of a lift if you do it right at the beginning. And I've always been a big advocate of bringing in counsel right at the beginning. You do it, you sit it, you knock it out right at the beginning, and you have a couple good hours, and you really get everything. You throw it out on the table, and you do your best whiteboarding right at the beginning. It saves time, saves energy. It's people, if prior planning prevents piss poor performance, right? So you do it right at the beginning, and everybody's on board. Counsel's got it. They know what can be sold in the market. They understand what tools are, I think it's just good to have different viewpoints when you're doing your structuring. And
no, I agree.
Counsel usually likes to have the thought process of from the financial advisor side.
Well, I hope they do. I'm not sure if Marty does. I think he just likes kicking him out the door. Just get out. No, but I'm just joking. It's he's from Utah.
We love. I love it having a broker dealer involved from the beginning. Like I said, a lot of people look at it from a strictly dollars and cents perspective, and like, well, I don't know, if we don't need one. But I can't tell you how many times we get asked, or I get asked, do we need one? What are the benefits of having a broker dealer? And a lot of times they're just acting as a broker of record, and that has its benefits, obviously, in enabling the company to sell in various states. It also provides an extra layer of due diligence and validation. But I think that the input that can come from a broker dealer on, hey, this is a good way to structure this. This is something we might want to think about in the future.
Yeah, the only piece that
Absolutely.
I would add to this. Sorry, Marty, I think you cut out. But the only thing that I would add to this that I think needs to be added, because in RegA it's a bit different, because they do play such an influential role, and I think it's not that they can provide legal advice or broker dealer, but they can provide sentiment information that will assist, and that's the investor acquisition. I recently watched how a broker dealer, a lawyer, and this with a client engaging, structuring, and offering. And this is the future. This is now going forward, what you need, because here you get the legal side immediately providing the framework based on what they already know from the company, what they can and cannot do. And if they're going to move this path, the lawyer immediately knows what action needs to be taken. So you end up saving time, money, and cost all the way through there. From a broker dealer side, you're getting the kind of offering you like, and now you got the support from the investor acquisition who's going to have to market this. See, it becomes a win-win for the issuer, the company itself. By getting all these people in the room at the same time, this has been very informative for me right now. To be honest with you, I thought it would be taking a different route, but what I got out of structuring that I didn't expect is that it needs to be at the forefront of the onboarding, or not, forget about onboarding, of the start point of an issuer thinking about Reg A. It cannot be just the money I'm going to offer non-voting. Sorry, we just got started, step one. And putting them to the lawyer, they're just, no offense, Marty, but it's really producing the documentation. But if you have all the other pieces there, wow. I mean, I just, as I was taking notes from all of you, discussing the different security types and all that. Sorry, go on.
Even, I mean, if you think about it, 2 points, if you remember, what do they call lawyers? They call them counselors first, right? They call them counselors, right? That's really their greatest strength, is to counsel you what to do. The production of the legal documents is just the fallout of the counseling. Okay, where a lot of the misunderstanding from an issuer is that they just think, a lawyer is just a document jockey, right? But at the end of the day, it's really the counseling that's the important part. Okay. The other thing I was going to say, Oscar, is that broker dealers also are different, right? And just like lawyers, just like doctors, everybody's got kind of their strengths and weaknesses, right? So BDs differ between whether or not they have more of an investment banking or financial advisory backgrounds. Some groups are very much just want to do X, and there's other groups that can do X, Y, Z, ABC, right? There's differing groups, and then there's some that specialize in certain industry categories. There's some that specialize in certain segments that will do just Reg A's and Reg CFs, and then there's others that'll do Reg D's. So it's not you can't lump all lawyers in the same bucket, and you can't lump all BDs in the same bucket. It's a very differentiated market.
I have a question for you on that, and that's a good. You're right. You are 100% correct on that already. So let me ask you. So let's say the BDs and Reg A, the one that you like, doesn't do structuring. To them, they're agnostic to it. So now, where would that advice come from? Obviously, there are BDs or investment bankers that specialize in that. So is that a new role now that we're thinking that? I mean, it already exists, to your point, in the D space, right? It's already there, right?
Well, yeah. I mean, it's not a sales pitch. We do that full space, right? For us, an issuer can choose, it's kind of a cafeteria plan. Do you just want X? You can have X. Do you want X, Y, and Z? That's fine. Do you want X and Z? It's kind of what somebody wants. I'm just making a point. All right. I don't want a listener to think that it's just, every BD is the same thing. Same with a lawyer and or a law firm, right? And you pick the lawyer, not necessarily the law firm too. That's a very different thing as well, right? So I think you need to be aware of that. Now, if you have a very mechanical and a very on the BD side, if all you have is somebody that does BD of record, then you can also have a financial advisor. I mean, that's somebody that's just going to be somebody that's going to do a monthly thing, and that may or may not be somebody that is licensed. They should be, but they don't necessarily have to be to provide financial advisory. You don't have to be technically licensed.
Okay. And Marty, I mean, obviously, I know we're both seeing the clients that don't want to work with broker dealers. So obviously they're going to be obviously there's always going to be those kind of clients. What kind of guidance can someone who is trying to do it without a BD? I mean, clearly we're asserting that you need one. You should have one because we provided all the merits, and we have webinars to discuss that. But from your point of view, where does it become a barrier completely from a legal side, or does it? Or you just continue knowing that this may not have legs to go on, even though you're proceeding with it. I'm putting you on the spot a bit, but
no, that's okay. That's your job. I think it really depends on what the issuer is trying to do, right? So some of the issuers think, hey, we're going to be able to go out and sell this completely on our own. We're willing to go and get licensed in the states that we need to. I've had those issuers, and they think that, they have whatever the marketing ability and everything through their efforts to go out and sell. And I'm not going to dispute that with them. I'll tell them the merits of why it's good. I really like what Jim had to say, and actually we're whether Jim realized it or not, but we're working on a offering with your group right now, and they've been involved from the beginning. And I think if you have the ability, and everybody's issuers they have different budgets and different plans and so forth, but if you have the ability to put together a team and have somebody, a broker dealer, I really like that. Toro has that investment banking background. That's really important. We in my law practice, we've worked with a lot of investment bankers on different financing, and having that just that knowledge base and perspective, I think really helps. But again, it's not always. It's not that. It just varies on what is needed. I'm not really answering your questions. I'm just saying a lot of different things. But
it's tough. I mean, we have great momentum. Both of you alluded to at the beginning. We've changed the game. The blueprint we had. 75 million brings in a brand new type of entities, and you both alluded to real estate. I mean, real estate, I think, is going to be one that's we're already seeing it. We're already seeing real estate platforms that in the past were stringent, accredited investor only, and now they're doing RegAs. Clearly, they're seeing the value of it. But those that know the market can pivot to a RegA because they understand structure. But that means it's going to open it up to others to say, oh, look at that, this regulation. I got to go in and it's easy, let me do it. So let's talk about real estate now, because real estate, for every other type of company, everything we've said is somewhat structured, but real estate is different. And I'd love to get your take on the differentiations that need to be taken into consideration when structuring it, given that real estate, you may not be selling equity, or maybe you are. What I've seen so far, I don't know if the proper word is cash flow, but dividend. They're selling the dividend of that. So Jim, I'd start with you on that one.
Well, sometimes you don't want to call it dividend. Sometimes it's safer to call it a distribution. So if you're not quite sure, call it a distribution, and then that kind of gives you a catch-all. A dividend would be literally from, equity. But there's different rules for real estate, and real estate has come. There's always you think you understand a lot of stuff, and then there's a segment of the world that pops up and is different. Real estate's one of those, and so is insurance, right? So it's always things that pop up on you that kind of change on you. And then there's, in the code, there's both the tax code and others, there's things that are different. And I'm not the world's expert, but even, if you look at REITs and the way REITs are designed and when certain things happen, both from the accounting side and the legal side, they're different. And I'm not a REIT expert, Oscar, so I don't want to go down a road that professes that I am. I just know that they are different. You need to, address those. What we're looking at right now, and we're bringing in some REIT experts to help us we just got a new assignment on a RegA opportunity, and that is bringing in a couple people to help us on the structuring side of that, because we're going to see there's a group that wants to do a serial RegA structure, and that is properties that the equity would be, you'd have kind of a holdco kind of structure, and then you would have almost this SPV serial structures underneath. And how would that work, and what would be the design of all of that? And it's going to bring up some very interesting things, but that's why I'm saying it's somebody that you would have never thought before the $75 million number would have been a RegA issuer. You would have never thought this group would have been, you would have historically said they're way too big, and the way they look at things would have not have been in a RegA way. And so RegA is going to blow out, and I think that you're going to start seeing the average ticket size differ. You're going to see the use of BDs more. You're going to see the use of structured finance more. You're going to see this is going to be a different tool. It's going to be a very different tool in 6 months.
Feedback, Marty. Obviously, you were indicating you're working on a REIT already. I mean, I have a few real estate deals myself, but I wasn't involved in the structuring. I get to see the after part.
Marty's going to be able to add the most value to the question because he's working on one right now. I'm just starting to get into one.
Yeah, we've got a few of them actually that we're working on, and it's interesting, Jim, that you said that, because this is a large player in this field, and so I think it'll be interesting to see. And this is their first foray into RegA, so but they're encouraged by and enticed by the $75 million number. And then in the other case, in one of the other cases we have, it's similar to these. It's a series offering, and it'll be structured as a REIT, but with the series offering and the whole triple net assets. So, and that one's actually really cool and really technology driven.
Multifamily, or what's segment?
No, so retail, they're gonna go out and buy Starbucks and Chick-fil-A's and those buildings, that are leased to those types of tenants, and
so
allow
kind of big box players.
Yeah, and but allow people to come in and buy, a share for $20, own, a $20 interest in one of these assets, which I think is really cool. And
fascinating.
Yeah, so it'll be interesting to see, kind of like they're hoping to be kind of like a Robin Hood of real estate. So we'll see.
It's interesting you mentioned that because we did have a panel on real estate for Reg CF. As you know, Regulation CF is starting to, even under $1 million, they were filling a gap in the real estate market. Now it's getting filled to 5. And just yesterday, we had a client that owns Starbucks locations, but he's only looking for like $1,060,000 and $2 million. That's the max for each location. So it is interesting how we're talking about this, that the landscape is changing, to Jim's point, that we are now bringing this in. And with that change, we all need to be more agile in working with our colleagues to ensure that the prospect, the client that we have, has the best way of achieving their goal, because ultimately I've seen great companies that should have had a home run in their capital raising, and they underestimate RegA. You said it earlier, Jim, you said these guys in tokenization, they're spending so much time on the tokenomics and all that, they put no time in the structuring. I would argue that in the same context, I think Mark Roderick kept saying that in our last panel, Marty, everybody needs to not forget that you need to market this thing. So as you know, this is just another one of these. So people go, so what's the percentage of importance? They're all 100%. How's that? You need one. Obviously, get an offering. You need a good opportunity. So this has been really insightful for me. I've taken it for granted, to be honest with you. I've been an advocate of broker dealers involved in RegA, Reg Ds right from the beginning for different reasons. But now this is just once again a more important reason. And I think what we need to do as an industry is make sure that they understand, as we're doing today, that it's not so simple saying I want to raise 75 million and I'm just going to offer them common shares, because the ripple effect, it could be anything, right? And nobody guides them. Sometimes I have a client right now that went out and they're regretting they get warrants on their RegA. Because on Reg A, warrants are very different than on a Reg D offering, very different. And unless you've gone through it.
Yeah, I think a lot of people also want to try to, but particularly entrepreneurs that have had 100% control for a long time, they also want to try to build in things that they can retrade, and it's like, you can't retrade once you've done certain things, right? You need to be smart on what you do.
This has been great. Thank you. So closing remarks on structuring from you, Marty, on the legal side. Clients coming to you, what do you want them? Obviously, now you're going to be working along with colleagues, making sure that. But what else could you add to that conversation piece as we close off?
Yeah, well, I actually really like what Jim said about, we are counselors and we're here to help. And I think one of the things that we find is, that the client doesn't necessarily know, the best way to do it anyway. So, and a lot of times we don't fully know all the issues. At least this is the way I work until I'm kind of putting pencil to paper and saying, okay, how do we, what's the best way to make this work? And, we have clients who will ask that want to get this all worked out. And I think there's a lot of legwork you can do at the beginning and say, this is the best structure to go. But sometimes there's iterations along the way. But I think that structuring is going to be, that's, I think that's where lawyers make their money is trying to come up with the best structure for what the objectives that the client has. Way back before all of these Otis Wealth and companies came, this was something that us lawyers were talking about, saying, I wonder if you could do a series offering under a single Reg A. And it was something we were just sort of tossing around and, hypothesizing about it. And, now it's something that's a fully accepted structure. And I think we'll continue to see that evolution and the creativity of the parties involved. And, it's the clients that come and have this off the wall idea that drives us lawyers to think outside the box and come up with, the next structure that becomes standard. So, structuring is a really important part of the process for sure.
Perfect. And Jim, in closing.
If you don't know what else to do, keep it simple. But I would actually advocate structuring starts long before you pick the instrument. And I don't, when someone comes to me and wants to talk about raising capital, and they'll say, I want to do a Reg A, or I want to do a D, or I want to do a token. I'm always like, well, why do you want to do one of those? And, if the answer is not real good, it probably is just something they, probably read about 2 hours beforehand. So a lot of times somebody hasn't thought it through. And I can give you song and verse about people that would, think they want to do a Reg A, and I've talked them out of it. They maybe needed to do a D, and then I've seen people that want to do a D, and I'm like, you should really think about doing an A, right? So there's a lot of people that just will use a screwdriver for a hammer. So there's a lot of misusing of instruments, and I think people need to kind of figure out what their goal is and try to apply the best tool for it. And Reg A has it's a great instrument for the right project. Reg D is a great instrument for the right project. CF can be a good way to get started. They're out there for a reason. They have purposes, and sometimes people misuse them.
That's perfect. Thank you both. A great discussion. Obviously, we now know the importance of structuring, and I hope it doesn't get caught up in my only concern of all this. It doesn't become a barrier where we scare off the entrepreneur, because this is my only concern, is that so I speak to this client every once in a while because for me it's curiosity, but I understand who they are. So they reached out to me about a year and a half ago. They were the 17th company to get approved for RegA. So to me, I was applauding them. $15 million. I thought they raised their money. They hadn't. And I was curious why. So I started asking, who's your lawyer? No, we didn't use any lawyers. All they want to do is rip you off for something that's a standard template. Okay. So I moved on to my next question. Oh, okay, no problem. So who's your broker dealer? Oh God, no, I'm not going to work with broker dealers because all they want to do is be paid for doing nothing. So, and you know what? The regulation says that I don't need a lawyer. I don't need a broker dealer. I just needed to do the audited financial statement, which was done. And now I'm selling it on the web and here I am. And great, how much have you raised? 75,000. So I think they're about 125,000 now. And weird enough, I don't know how they. So my only concern is that why I bring this particular client in is that the whole notion of the Jobs Act was to democratize, to allow companies and entrepreneurs to use regulations in the most easiest way possible. I'm using the word easy, maybe it's a better word, but to use it and not be hindered by intermediaries who get in based on opinion. And so, this is what we hear in investor acquisition often when they say, would you rather have one investor, a venture capitalist, or would you rather have 10,000 who support your product? And this is really an interesting analogy. I say you need both. We're lucky to have both, but most companies, they think they need to pick and choose. I'm advocating that people shouldn't. That means broker dealers as well and lawyers need to be agile in discussion with companies that it may not be the ideal structure you may like, but it's the structure they like. This is something that David Wheel often reminds me of why the Jobs Act was created, to put the business owner driver. It comes with a responsibility. Don't get me wrong. You were given a choice A, B, C, D. You can't bitch and complain later and say, Jim, you and your team did me wrong. No, you didn't. We outlined it. You chose this path. This is you. Okay, good. So I just want to put that out. That was my only, it's not so much cautionary. I agree with you. I love the fact I want to make the structure engageful and a win-win situation, not based on bias, but based on, what's happening in the market. And right now we are one of the most amazing times, truly, because now in your structuring, you have to factor in secondary market trading.
Well, I would make one thing. People grossly underestimate what it costs, how long it takes, how hard it is to raise money. Okay. It's 3 times more expensive, 3 times harder, and it is 3 times longer. It is not, and people, most entrepreneurs, they love their baby, but you know what? Their baby isn't pretty to everybody. And it's, it takes time. And
yes, of course,
it takes time to educate the public. It takes time to prepare. It takes time to do all the kinds of things that, and people grossly underestimate what that is. I mean, just the concept of marketing, right? A lot of issuers think, broker dealers do all the marketing. No, right? You should really have a separate marketing function. Issuers think the lawyers do all the structuring. Well, that's not always true, right? They think you do all of it too. That doesn't work that way, right? There's a lot of misinformation, and it's always an education process that, and it's not easy. It's not a fun business.
I agree, Jim. I have no illusions of how long things take. I know my Series A went on forever. But I do love this. I love it because of you can strategically plan it out. I don't know, I feel a better sense of control. Not control from the ownership, no, control of what's happening around me. So, but thank you both, Marty, Jim, once again. I'm looking forward to continuing these discussions. And Jim said it best at the end. This is an ongoing education that we will continue because we have not reached, I mean, we're just scratching the surface where this at. So please share. All these videos are on KoreSummit.io or YouTube channel at KoreConnects. And if you want to reach Jim or Marty, just send us, but their contact details are there, their LinkedIn profile, their email address. So you can reach out to them. As you heard, they want to speak to you. They want to help you. Thank you. Have a great week, guys. I'll be talking to you very soon. Have a great one.
All right.
Cheers.